Hello, friends. Welcome to OAWA's weekly update on markets and the economy, where we bring you a curated selection of the most important global and domestic news. On the global front, news of downgrade of US sovereign credit rating by Fitch Ratings from AAA to AA plus hogged the limelight this week. In a statement, Fitch cited three reasons for downgrading the US rating. Number one, concerns the US economy is going to deteriorate over the next 3 years. Number two, a high national debt. And number three, repeated political standoffs over managing the country's finances, specifically brinksmanship over the country's self-imposed debt limit, the cap on how much the US can borrow to pay its bills. US Treasuries, stocks, and the dollar index were not majorly impacted by the news, and as per some analysts, there will continue to be demand for both long term and short term treasuries, and they don't see this downgrade as a significant signal of any trouble ahead. Moving on to news about another major advanced economy, this week saw Japanese bond yields touch a 9-year high on BOJ, that is Bank of Japan, making some monetary policy changes. In an unexpected move, the Bank of Japan said it would offer to buy 10-year Japanese government bonds at 1% in fixed rate operations, in effect widening the trading band on long-term yields. The central bank added that it was technically maintaining its previous 0.5% cap on 10-year bond yields, but this level would be a reference rather than a rigid limit. However, the Bank of Japan held its overnight rate at minus 0.1%. Following this announcement, the 10-year JGB, that is a Japanese government bond yield, rose to as much as 0.572% following the announcement. Most analysts feel this is an indication of policy tightening by the Bank of Japan and the beginning of end of YCC, that is yield curve control, that the Bank of Japan has been resorting to for many years. Moving on, last week the ECB, or the European Central Bank, lifted interest rates by another 25 bips to 3.75%, their highest level in 23 years, and kept its option open on whether more increases will be needed to bring down inflation against a worsening economic backdrop. The Governing Council's future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to achieve a timely return of inflation to the 2% medium-term target, the ECB said in a statement. The move came shortly after the US Fed also raised its rates by 25 bips. Moving on to news on the domestic front, Indians are traveling like never before. The strong demand for air travel, coupled with the bankruptcy of Go First, has directly benefited Indigo, which not only has increased market share but posted its largest quarterly profit of Rs 3,089 crore in the April to June 2023 quarter. This marks a dramatic turnaround from last year when it had posted losses. The airline is planning to use a portion of its fresh cash balance, which stood at Rs 15,691 crore at the end of Q1 of FY24, to acquire a few aircraft and related assets such as engines. And finally, India's largest NBFC, Bajaj Finance, has crossed the Rs 50,000 crore mark in terms of its total deposit book, and the number of depositors who invest their savings with the NBFC has also crossed the 5 lakh mark. Offering interest rates of 8.5 plus for senior citizens and 8% plus for others seem to have been part of the reason for success in garnering higher deposits. Bajaj Finance raises fixed deposits as part of its overall fundraising strategy, which includes non-convertible debentures, short-term commercial papers, and bank loans as well. Deposits comprise 21% of its overall source of funds. That's it from us this week. Please click like, share the content if you found it useful, and do visit our website www.oawa.in for information on our courses. See you next week.